So we talked about liquidity, we talked about solvency, and then the last ticket here is profitability. We're going to be mainly focused on is profit margin and gross margin ratios. But I want us to also know all of the returns as well. Return on total assets, on equity, book value per common share, and basic earnings per share. All this is useful for investors, especially the earnings per share. So expect all of it, but make sure you know the gross margins are probably the easiest. So profitability, we want to compare our company to other companies to determine how profitable we are in comparison. Again, all these is memorization. Profit margin percentage, we're just going to take our net income over sales. So in this example, we had net income of 53,690. Our total sales is 494. And so we can see our profit margin is 10.87. And so let's do this on some companies. Similar businesses, I think we could argue Walmart and Costco sell similar things, or they're resellers, right? We can compare sales. We can compare liquidity and solvency. So this is how they compare. Walmart has a lot more income, a lot more revenue than Costco, right? This is in millions. So this is $519 billion in revenue. It's an insane amount of money. And this is $149 billion. So how can we compare these two? They're similar, right? But how do we compare their profitability? We'll use their margin. This is called a margin analysis. And so what we talked about is, I want to use exactly here so you can see how we assess. How do we figure out their profit margin? What's their net income divided by net sales? Net income attributable to Costco. Here, that's what we care about. 3,659 divided by total revenue, 152,703. So Costco has a 2.4% profit margin. Did everyone see how we calculated that? We took 3.7 divided by the net sales, or the total revenue. 2.4% profit margin. Now, let's see how that compares to Walmart. Walmart, we have 14,881 net income attributable to Walmart divided by 519,926. 2.9%. And so if I was Costco, who has a more premium brand, I would ask myself, and has charges a membership fee, what is causing our net income? What is causing our Costco's profitability to be less than Walmart? And then we can use that we can use those tools, right? The horizontal and vertical analyses in order to determine what's going wrong here. And so I would use the tool like, it looks like we have operating, selling, and general administrative expense for Walmart as a percentage of their total sales. So we can say that divided by 523,964. 108,791 divided by 523,964 is about 20% of their cost goes into operating the stores. Let's see. Divided by 152,703. Only 10% goes into operating stores for Costco. So it's more expensive to operate the Walmart stores. So it must be coming from something else, right? And so we'll go 152,703. We're spending 90% or 87% on our cost of goods sold, merchandising costs or cost of goods sold, while Walmart is spending 75%. And so there we get our answer, right? We can see really quickly that one of the main reasons that Walmart is having a better profit margin is because they're able to better manage their cost of sales. And so if I was in Costco's management, one of my quickest questions would be, in order for us to improve our profitability, how do we make sure that we are getting a better deal on our sales as a part of revenue? Either we need to charge more for our products or we need to get better deals. And this makes sense because Walmart has always been known for significantly negotiating down costs with sources, while Costco has been more known for giving you the cost that they pay, right? And making more money off membership fees. So this is how we can see comparisons of businesses, right? This is the tools we're using. That was what we just used profit margin. Look how much we learned. I would be surprised. I didn't know this about Costco and Walmart. I would have never guessed that Walmart has a higher profit margin than Costco. But this is what we learned just from this class. So you can do this with any company, any investment. I use this to buy, not a lot, I'm not rich off this by any stretch, but I use these assessments back in 2010 to buy Walmart stock. And now, because I saw that Walmart was undervalued. And so you can use this. And now my Walmart stock has almost tripled in value from the original day. So you can use these tools to be able to see, wow, Walmart is doing very well. Maybe I want to invest in it, even though other companies seem to have a higher valuation or are getting cost more, valued at more. And so we'll do some comparisons too to how to make that investment decision called price earnings, which will be a lot of fun to go over.